Apologies for the delay. If you can see me, you can say a hi. Thank you. Thank you so much. Thank you so much. Poleni sana. And you can also tell me where you're watching the webinar from. We always ask that question, where you're watching the webinar from. You can tell me. And you can also tell me if you can be able to see my notes. If you can see my notes, you can also say a hello. So I can see Nairobi, Nakuru, Machakos. Karibuni sana, karibuni sana. We're going to have a very wonderful session today. I can see Nanyuki, Nairobi. Thank you so much. Thank you so much. You can tell somebody that we are online. My co-host, you can also tell me if we are live on YouTube. You can also be able to find us on YouTube. Karibuni sana. And if this is your first time to join us, you can also tell me a yes. Is it your first time to join us? Tell me a yes if it is the first time to join us. If it is the first time to join us, we've been having these webinars. Oh, I can see yeses. I can see MK Frolens. We always have these webinars. Every single month, we host the 3 webinars. We host one for tax trends. Tax is always changing. There are so many regulations that are coming in every time. So we do tax trends every month. We also do a sector-based taxation training. Last week on Wednesday, we did for real estate. And also we do this training, this webinar on a different topic on taxation every month. So you can go online, look for RWK Africa and follow us, like us, and then you continue learning with us. You can also follow me, Dr. Regina Kingori, on all social medias. And we also opened a YouTube channel this last month. So you can also be able to view the past, what we've been able to do. Not quite a lot, but we shall be putting in new content every time. And you can also be able to learn a lot. So today we have a very interesting topic. Let me be able to display it so that you can be able to see. So you told me you are able to view. So I'm hoping even now you're able to view my content. So this is, today we are talking about tax compliance and emerging issues in Kenya. What is the emerging issues? So this is the content for the day. I will talk about the importance of being compliant. I know some of us don't want to be compliant, but for you to do business in Kenya and for you to do business anywhere, you really need a lot of compliance. And we talk about compliance. We're going to talk about tax structure in Kenya, just a few taxes and tax obligations, just to help you understand a bit of taxes. Most of the training that we do on a monthly basis is 2 hours. So there's not a lot of time for you to be able to learn. So you can keep learning every month that you're online. You can keep learning, and one of these days you're going to really get a good content and you're going to get value. And you can also come for our masterclass, taxation masterclass. I'll talk about it at the tail end of the training. We'll also talk about tax planning, tax saving strategies, emerging issues, and understanding iTax. I don't know if we have all that time, but I'll cover as much as possible. I'll share with you these notes. So these notes, you can be able to find them when you register. My co-host, you can do the registration on the chat. There's a registration link that you're going to put your details there, and we are going to share these notes with you after the webinar. So karibuni sana. So let's talk about the introduction part. Is it cheaper to be compliant or non-compliant in the long run? And I love the question, because at the end of the day, we get to a point where we say the burden of compliance too much. If I run my company this way, I'm not going to make profits. Or in this industry, there's black market. So when you become compliant, your products become very expensive, so you cannot sell. There's always those questions of compliance. And it is very important for you to understand what is the bargain for you and your business. First of all, a business that is below 5 million, that is a 5 million turnover, to the threshold of VAT, sometimes you can survive without being compliant. But if you have a business that is above that margins, and you want to grow your business, you want to move from 5 to 6 to 10 million to 20 to 50, compliance is a must. So understanding taxation and having that mindset that I need to pay taxes, it is very, very important, so that you're able to graduate your business to compliance as you grow the business. So without being compliant, there are so many penalties and interest for non-compliance. So if you look, for instance, if you go through, if your company is not compliant, and the day you get taxes, you know, the way we do, the KRA does tax audits, and they do assessments, the penalties and interests are always a lot of money. So there's a lot of penalties and interest. So also there are other serious offenses that, like tax evasion, the penalties and everything. Tax audits and investigation, there's a lot of tax audits that are going on, investigation. eTIMS is one of the biggest compliance system that is pushing our businesses to be very compliant. So for you to have your business and you need to sell to your customers and they're asking you for eTIMS, it means you have to put your business in order. So a lot of tax audits, a lot of investigations are carried out every single day. Tax incentives and benefits from compliance. So when you become compliant, there are also other benefits that you get. For instance, for export business, you're refunded. There is special economic zones and so many other things. Even when you're compliant, you get a tax certificate. If you need to invest, if you need to borrow money, you can borrow money. If you need to have an investor on board, they want to see a tax compliance company. So they will be looking at taxes and how you've been running your business. Long-term financial health. When you become compliant, there's a lot of stability that comes to your business. You know that 10 years to come, 20 years to come, your business will still survive. Because if there's something that can collapse a business to zero, it's taxes. For instance, if you run your organization 5 years, 10 years, and then you get a tax demand that you cannot be able to pay, then it means that your survival of the business is at risk. So it is very important for you to be compliant. It will also help you secure loans, grants, and other financial support. So, and other support importances of being compliant: access to capital, we talked about that, enhances growth. If you need to tender today, tendering, mergers, whoever you're doing business with, they want to really see if you're compliant, operating with a peace of mind. And I think that is the greatest thing that you'd want for your company, that you can operate the business with a lot of peace of mind. So let's talk about the tax structure in Kenya. I'm going to just mention a few tax areas. I'll not be able to really explain in length. When you come for taxation masterclass, we're going to have a full day where we talk about payee, all the benefits, what it means, everything. And then the next day we talk about VAT, everything the next day. So it's a very important masterclass for you. But today I'll just mention something very, very small. So pay is a direct tax, and this is a tax that is remitted on behalf of the employee by the employer. And I know we know that. And when we talk about pay, we also talk about other deductions that comes for the employee. And those other deductions are NSSF, SHA, we have the housing levy, we have NITA, and we have pay. So when you have the employees, those 5 taxes and levies, you have to contribute them. When it comes to pay audits, KRA is looking for to see the casual workers that you're having in the organization that are supposed to be employees, but you're declaring them as casuals. So around that, the audits around pay, most of the time are those wages and the casuals and the consultants. Some of us resort in having consultants in the organization, and those consultants are not even consultants, they are employees. But because you want to do the 5% withholding and not do the pay as you earn, you incorporate them as consultant. The moment you do those many withholding certificates, it is an audit trigger. And for a consultant, first of all, the rule that KRA uses, is this consultant has an office or a desk in the organization? Do they have a laptop given by the organization, an email address by the organization? What time do they come to this organization? And they judge that if this person is a consultant or is an employee. The moment you even come in there on a daily basis, you have a desk where you sit, you have an email address given by the laptop, and everything that you use in there is provided by the organization. You fail to be an employee, you fail to be a consultant, you are an employee. And I find some of you making that mistake, and you keep paying this person for a full year, 2 years, 3 years as a consultant. The moment audit comes on board, you are charged, this person is now from graduated from the consultant to the employee and then pays you. And guess what? The mistake is not charged on this person. The mistake is charged on the company. Remember, this person, you paid them and they left, or you keep paying them. But that mistake around employee, around the payroll, it will be charged back to the organization. So it is very important to see how you handle consultants and how you handle casual wages and casual workers. When somebody is in the organization and you're paying them above 24,000, graduate them to be on the payroll. When they hit 1 month, 2 months, 3 months, graduate them to be on the payroll. And if this person is on a casual wages sheet, make sure that you have the proper documentation. Have the wages sheet. That wages sheet that you're paying on a weekly basis, have their PIN number, their ID number, their phone number, the amount of money you pay them, and the number of dates, and let them sign. If you don't have that proper documents, KRA can decide to put those wages to pay as you earn, because you put wages there as 400,000, but you did not describe per person you paid them how much. And this person has been a casual from January to December. You're paying them, by the end of the month, you're paying them 30,000, 35,000, but you're still terming them as casuals. So those are some of the cases, and that's some of the areas when it comes to pay as you earn. So also pay as you earn as a director of the company, you're supposed to pay payee. So some of us say we don't pay ourselves. Yes, yet we come to this work every single day. That is a work that is surviving, is helping you, is earning you a living. So as a director of the organization, you're the first employee. So you cannot say, even today, some of us are running companies and we don't even have pay as you earn. You as a director, you're the first employee of the company. So have pay as you earn for your salary. If you do director fees, they are also charged taxes. All those allowances, that management fee, they are always charged taxes. So around that area, whatever you do, make sure that you do it properly. The final thing before I forget, I keep remembering, most of us do business where we withdraw money from the bank accounts as directors of the company, and you withdraw money to send to your M-Pesa or cash because you want possibly to do payments, but you withdrawing it, and on the bank statement, it is registered you're the one who is doing those withdrawals. I've seen so many cases, KRA terming that money as money you paid yourself and charging pay as you earn. So as a director, you should separate yourself totally from the business. Don't make those withdrawals or deposits. Some of us also do collections. We do cash collections, and you're just depositing money. You're depositing money. Remember, any money that you're depositing in that company account should be sales. So, but the most dangerous part is the withdrawal. Even if you are withdrawing money to pay for petty cash or to pay other things in the organization, KRA will term that money as money you paid yourself, and they'll charge you pay as you earn. So it's very important to understand that. Let's talk about VAT. And I know that you know VAT, and there's a lot of issues around VAT because we have e-TIMS and the outer population. So VAT and e-TIMS is something that is always emerging. When KRA first introduced outer population, we never thought that we'll get here where we are, where it is auto populating without fail, and you cannot add or reduce. I don't know how you're faring on with the auto population, but what I can share about VAT is extremely tricky, especially when you have turnovers. And especially now because of the issues of e-TIMS. There are some of our organizations that have not been able to even pay VAT recommended by the auto population sheet. And since the auto population came to be very strict around November, December, January, the companies that would pay 500,000 per month, they are now paying a million plus. e-TIMS is pushing compliance to the next level. And that was the nature, and that was how e-TIMS was designed to push our organization to be more compliant. And it is working very, very well. So for you as an organization is to sit down and say, if our business is pushed to 90%, 95% compliant, can we still make profits? Because some of us, how we argue VAT, we argue that 16% is your profit margin, which is very wrong. So some of us need to sit down and recalculate how we do our profit margins so that we are clear. What do we pay for 16% and what is our profit margin? Because if you calculate that 16% affects your margin, and without a population, you'll be paying a lot of taxes and making zero profits. So my advice right now, because in January and even now, if you check your auto population, there's a lot of issues. My advice to organization is look at your margins. Look at how your business survives with e-TIMS, because I believe e-TIMS is here to stay. Also, any organization that has VAT obligation, there are a lot of tax issues around VATs, a lot of audit issues, and a lot of queries on VAT. And because of that nature of e-TIMS, there's a lot of a lot of our pins are being deactivated so much. They are being deactivated so much. So if so you can check how you also do that VAT. Make sure that you don't have those many issues, so that your VAT is not affected every month. Some of us this year, we shall be always at KRA asking why is your VAT not working, those special tables, because every moment you do a mistake, they just deactivate it. And then you start moving around. And before they reactivate those special tables, there's a lot of process that is being followed. So make sure that there's no mistake that you're doing. You don't have invalid invoices. You are paying that VAT on time. You're making sure that all your sales are on eTIMS and all your purchases are on eTIMS. Make sure there are not mistakes. Because the moment they deactivate, for you to be reactivated again, there's a lot of query, a lot of documentation you have to provide. It's like a total whole audit. And that is the formula that KRA want to use, so that eTIMS compliance is done. So I see this year, if your PIN will not be deactivated at least once, you'll be very good. But some of us, because of them, how we run our business, it will be deactivated. You go to KRA a full month or a full 2 weeks or 1 week, they reactivate it. Then you stay another month, they deactivate. It will be the nature of the day. So let's check how we are doing business, because that formula is here to stay. And I know some of you who have a lot of VAT and a lot of turnovers, you're really being disturbed by that formula. And some of you have even talked to me and you're like, we are so demotivated to do business in Kenya because of how even that compliance is really being pushed. I think that is a new norm. For me now, I think that is a new norm. And with that new norm that is happening, it's us to now comply with it. If we need to do business, then we have to follow that structure. Otherwise, I don't know which business you're going to do that doesn't have eTIMS. Let's talk about corporation tax. Corporation tax, we know at the end of the year, you're supposed to show your company net profits, and you're supposed to do your taxes, corporation tax, and you're supposed to do that audit within 6 months. And right now we are doing audit for year 2024. And we are also your auditor, so we can do you a very good work. But when it comes to corporation tax, the biggest portion of work that you should be able to understand is how you're able to articulate your documentation. For corporation tax, the biggest area is documentation. How do you have your sales in order? Do you have your purchases and your expenses in order? Bookkeeping for corporation tax is bookkeeping. Have you done your accounting software very well? Do you have your sales ledgers and purchases ledgers done well? Bank reconciliations and bank statement, are they in line with the sales that you made? So corporation tax, another thing, should be done by an auditor who understands tax. KRA has become very sensitive in how we do representation of audit reports. So anything that you file, it becomes an audit trigger. So some of us, we consider profit and loss, but yet even KRA checks how we do our balance sheet. If you have a balance sheet that has a lot of, for instance, let me give an example, your debtors report becomes, your debtors that you have reported on your balance sheet is like 50 million. But your sales there at the beginning of the sales, the turnover, the entire year sales is 10 million. Yet your debtors is 50 million. Remember, those debtors are credit sales. So you have to relate debtors and sales. So they always have those opening debtors, how much was it? Closing debtors, how much was it? So they always relate the balance sheet items to under declarations. Debtors can show that you under declared. Your creditors, you cannot purchase and not sell. So if you purchase and not sell, then your stock should align with your purchases. So if you have an auditor who just do calculations without understanding the implications, then when the tax query will be there on your how you do your corporation tax, it will be quite heavy for you to be able to answer. And again, documentation is what is key. Corporation tax. So this is the scale. I'll share you the note. This is the scale for individuals, and this is a scale for individuals under pay as you earn, and under business. You know, those people who do have a business name and you're using your PIN for business. You're using your PIN for business. This is a graduated scale. And I always say, when you get to 300,000, you can see here, when you get to the 300,000, you get to 32.5%. Yet, if you have a limited company, it is at straight 30%. When you hit around 500,000, so it is straight at 32.5%. So when you start getting those profits, as an individual, as a sole proprietor, it's always good to graduate that company to limited company because it is at fixed 30%. But this one graduated has 32.5% and 35%. So also we have the withholding. This withholding should be done by professionals. You do the deductions as a company. If I come to you as a tax consultant, you're supposed to do the 5% withholding if you pay me above 24,000. So some of us, we pay auditors, lawyers, those trainers, and we don't do withholding. And when during audit, KRA will ask you for that money, and you will have paid that lawyer and he left, and then you'll be the one to pay the penalties. We have the rental. We have the rental. Apologies, I wrote here 10. It's supposed to be 7.5%. The monthly rental income tax is 7.5%, and 7.5% and 1.5% for housing levy. So for any person, any landlord that is doing monthly rental income tax, the MRI, you're supposed to do 7.5% on your gross rent. Then you do 1.5% housing levy on that gross rent, and you do it 2 separate returns. And this rule was introduced last year, and this year you're going to get a lot of taxes on that area. So if your landlord or you are a landlord and you did not pay a housing levy last year, you're going to get those calculations because already you did your MRI. So they're going to use the MRI calculations, those gross rents, to calculate housing levy, and they send you those demands plus penalties and interest. So for any person who is doing that, kindly comply with housing levy. Excise tax. So if you're selling excisable, if you're manufacturing excisable goods, then you're supposed to pay excise tax. So this is in categories, and excisable goods are like water, beer, wines. Those, they are excisable goods. So it is very important to understand and be able to be compliant. And excise tax is very, very, very audited, very audited. So if you, in the manufacturing of these excisable goods, it is very important for you to even have a sound tax consultant. even if you do imports of those beer, and it's very important to have a sound tax consultant, because your company will always be audited, always. Anytime you ask KRA for excise stamps, they always you always go through an audit. So if they give you 10,000 stamps, when you go back, they'll tell you the 10,000 stamps we gave you a month ago, 2 months ago, account for that. So you're going to go there with an analysis accounting for that excess stamps. And after you account for those stamps, you're also going to account for VAT. Remember, excise also will also come with VAT. So you end up paying a lot of excise tax and a lot of VAT. So when you're even thinking of such a business, it's very important to also look at your profit margin and the market, because sometimes you find if you're not articulate on tax issues, you may end up even closing your business, because now tax becomes very, very expensive. You did not anticipate that. Most of the companies that do some of this manufacturing, they pay a lot of tax. So you have to be aware of that. Capital gain tax. Capital gain tax is levied on transfer of property in Kenya at a rate of 15%. And is on net gain. So if you buy land for 7 million, and this is about 3 million sale of land. So if you buy land at 7 million, after 2-3 years, you sell at 10. That 3 million gain, you remove any expenses, could be agency, legal fee, then you pay 15% of that gain. And if you don't pay, because sometimes you don't pay, during transfer of that land, because the buyer is going to transfer land and they're going to pay stamp duty. The moment they pay stamp duty and they transfer land, they are going to declare that they sold. Who sold? They are going to declare that PIN. And then KRA gets that alert that you sold land worth 10 million, and they will write you a letter asking you for capital gain tax. And this will happen after a year, 2 years, when you don't even have that money that you sold land. So it's very important to do capital gain tax on time to avoid those issues, and make sure that you have documentation for capital gain tax. That land valuation, the sales agreement, the legal fee, receipt, make sure that you have those documentation saved somewhere. Because after 2-3 years, KRA will come back and audit that capital gain, and you will not be having those documentation. So tax planning, let's talk about tax planning. If you have a question, you can ask me. If you have a question, you can ask me, and we can proceed. Let me just see your conversation in a minute before we proceed to the next portion. Someone is saying, I usually share my email, but never got anything. Co-hosts, make sure that you kindly, I know the reason, Rashid. I know the reason why, because you're not doing your email on the registration form. Kindly share your email on the registration form. Kindly. How can a business prevent its PIN from getting into VAT special table? A very good question, Faith. Do your VAT very well. That's all. Pay your VAT on time. Do it on time. Make sure that all your sales are on eTIMS, all your purchases are on eTIMS, and verify that invoice was remitted. So when the auto population is done, you can be able to view. The moment you put an eTIMS, it has a QR code and it has everything, but it was not remitted, so you can't be able to view on the other side. That will push you to the. So before you pay your supplier, go online, go on VAT, on iTax portal, and verify that receipt. You can be able to verify that receipt, that invoice before you even make payments, so that you can also protect yourself. So, and also make sure that there are no invalid invoices. There's a lot of VAT deactivation, a lot. I guess last week or 2 weeks ago, a lot, the KRA just did crazy deactivations. And remember, the moment your VAT is deactivated, you don't do business. Your business is at standstill, because nobody, you're not going to do any eTIMS receipt, because nobody is going to accept that invoice. Someone has a rental of 50, is it an offense to declare the income in your annual return and decide not to do MRI? I prefer you do MRI, because the moment you declare in your annual return, first of all, you're not supposed to combine business income and rental income, because at the end of the day, that's MRI in the income tax. You're going to remove expenses and so many other things. So at the end of the day, you're not even going to pay due taxes. So for me, I would prefer you do it on a monthly basis, so that you not, and when you do it on a monthly basis, it's final. It's final. You don't do the income tax. So clarify the MRI below the 2,000 who have taken up mortgages can opt prior model. So for people who get rental to 288, I believe 288 is about 24,000 per month. And that is the threshold for pay as you earn. So remember, if someone is earning 24,000 and below, they are not supposed to pay as you earn. Similarly, if you're getting rent below 24,000, you're not supposed to do MRI. You're exempted from that. But anything above that, you're supposed to do the MRI. And you're not supposed to net anything, not the mortgage, not the expenses. So even if you have a loan, some of us, we receive rent of 100,000 in a month, and that 100,000 at the bank you're paying 120 or 130,000. Actually, you are adding more money to pay that mortgage for the house. KRA doesn't care. So that 100,000 that you received, 7.5% and 1.5% for housing levy. So at the end of the day, it's 9%. What is the reporting requirement for sole proprietor according to KRA at the end of the year? At the end of the year, you're supposed to do your business income, as a sole proprietor under your personal PIN, and pay taxes due. And remember, if you're using eTIMS, because some of us are using eTIMS as sole proprietors to sell, make sure that even if you're not doing VAT, because there's eTIMS for non-VAT, the people are not on the threshold. Make sure at the end of the year, especially for 2024, if you did eTIMS, do not file any return. Declare that business income, put expenses, and pay due taxes. Pay due taxes. The notes are never shared. Gubesi, my co-host, we are going to fight with you. We always share, so kindly, I'll follow up on that, kindly. I am VAT registered with. What is the implication of having expenses in the profit and loss? And these expenses actually true and paid for. They do not have VAT element, e.g. vegetables, but they have not been declared as exempt or zero in my VAT return every month. No problem, Nasibo. No problem. For VAT, you only input the eTIMS invoices, eTIMS purchases, and eTIMS sales. Any other expenses, don't input on that VAT. Those ones you consider at the end of the year when you're doing income tax. You're going to consider them at the end of the year when you're doing income tax. Remember, KRA had stated that they are going to disallow any expense that is not eTIMS compliant. They had indicated that for year 2024. And if you remember, the Finance Act 2023 was attested in the courts, and it was the Finance Act that introduced eTIMS. So we don't know if they are going to react. That is a tax trend. And if you keep coming, I'll keep checking. If they are going to be strict on making sure that all our expenses are eTIMS compliant, if they are going to disallow. But my feeling is that possibly for year 2020, for year 2024, they might accept. But for year 2025, I think with the auto-population and the push that is there to deactivate, reactivate special tables, so many things, I think we are getting where they stated that all our purchases and expenses should be eTIMS compliant. So we are getting there. If VAT right now, it's on auto-population only, without input of anything, we are getting to that point where now our corporation tax will be auto-populated. I don't know if we are ready. I don't know if we are ready for this new norm. I don't know how many of us are ready for that. How can I access notes? I indicated that you register on the registration link. Why are KRA charging housing levy yet we file MRI? How to file housing levy? I file MRI company need return for corporation tax. So George, that was declared last year around, I guess, March, where they insisted that now you have to do MRI on the housing levy. You're supposed to do housing levy on the rent. And that was introduced, and also doing MRI, also doing housing levy on turnover tax. So the areas that housing levy was introduced first on payee, where we do 1.5%, 1.5% by the employer and 1.5% by the employee. So that is on payee. And then it was introduced on the rental, the residential rent, MRI, where you do 7.5% on MRI, 1.5% housing levy. Then it was introduced on the turnover tax. So for people who do turnover tax, 1.5% on your gross sales, turnover tax, then 1.5% on your gross sales housing levy. So total 3%. So in those areas, if you do turnover tax last year and you need not do housing levy, you still get those penalties and interest. Good. M is saying, I always receive my notes. Thank you. At least he has redeemed us. How to deal with the VAT taxable supplies where the annual business turnover is less than 5 million? Do I even need to be VAT registered? You know, you don't have to be VAT registered because you're not on the threshold. However, you're supposed to do corporation tax. If you have a limited company, do corporation tax, have your documents very well. If you are registered as a sole proprietor, still declare your sole proprietor business income. Sole proprietor required to have audited accounts. It's not a must for you to have audited accounts, but I always recommend let your accounts be done by a certified person, someone who understands tax. Remember, most of our tax queries come from documentation that we give KRA. It's data driven. Is the document, is how you did it on there, is how you are able to do it on the iTax portal. So the moment you do wrong calculations and the wrong misrepresentation, it becomes audit trigger. So you might be thinking, oh, I'm filing and I'm declaring, but whatever you're filing is actually giving you audit triggers. What about landlord who is also an employee? That one we answered last year. So the salary is charged MRI, the salary is charged housing levy on the other side. Then the other side where you're doing landlord, you also do the housing levy. So you're not excluded because you're also an employee. Remember, as an employee, you have a salary, but you also have rental income. So those are two separate sources of income. Okay, so can you elect to apply 7.5 MRI on commercial rent? No. Commercial rent, no. MRI is on residential property. On commercial property, you do the 16% VAT and you do the 30% corporation tax, both of them. So commercial property, any commercial property, by the way, they pay a lot of VAT, a lot of VAT. A lot of VAT, and I always recommend when you're building the building, I'll talk about that in the tax saving strategies. So for commercial rent, the space is vatable, 16%, and you also do the 30%. Let's continue to our notes. I have known where I left the question, so I'll come back. I'll come back to that. So keep asking the question. I'll come back to the questions. My co-host, you can tell me there are people asking for a record too. You can ask. You can tell me if we are live on Facebook, on YouTube. You can tell me on the chat so that someone can be able to see the recording. Okay. So let's go back to our notes. Let's go back. Let's talk for about 30 minutes so that we can answer the questions again. So tax planning is a point where you're able to plan on your taxes, and this helps you reduce your tax liability, and you also become very compliant. So there's a lot when it comes to tax planning, and we also do a lot of tax planning. We also help you on that. And you start paying your taxes correctly and able to handle any tax issues that you might be having. So what are some of the tax saving strategies that are there that you can be able to use and save on your save a bit of some coins? Claiming your VAT on assets. First of all, early registration of VAT obligation, especially when you're constructing a commercial property. So that's what I wanted to mention. So when you're doing the commercial property, it is vatable and it attracts a lot of VAT, by the way, a lot. And remember, VAT is on purchases, it is on sales. So it's an input output. You have to do those deductions. So you find on a commercial property, because you don't buy something every single day, you find at the end of the day, you pay a lot of VAT. So when you want to construct a commercial property, you register for VAT. Any construction material, the 16%, you use it. You build a very huge credit. By the time you start renting out that property, you can use that credit for a year, 2 years, 3 years. But some of us will wait until we finish construction, then that is the time we remember. We should have done that. So we lose on VAT that we used on construction of the property. Very important. Also, early registration of somebody who is doing export business. if you're doing export business, you're refunded VAT on your purchases. So register early, be able to show all your purchases, make sure that your ITIM's compliant, so that at the point where you request for those refunds, the audits can be done very swiftly, and you can be able to get your refunds. We advise on that part. So if you're having that issue, you can also talk to us. If one is VAT registered, you buy from another registered entity. And I know that one we do. So right now, because of ITIMS, just buy from someone who has ITIMS, so that you also have proper documentation on your side. Claiming, and I said ITIMS, you also verify before you do payment. Just go online and do ITIMS checker to just make sure that those details provided there, that it was remitted. By the right now, the organization, they can't pay you until they see that data is auto-populated on their side. It's a rule now. So do the same so that you also avoid a lot of these issues. Claiming input on assets. So if you buy an asset, this is a laptop, is a vehicle, it's a machinery. The VAT element, you can claim it. You can claim it. Planning your purchases right now. You have to really plan, and especially people who do a lot of turnover, do planning. So, and you can buy on credit. Remember the tax point. The tax points happens in 3 areas. We always say the earliest of invoice generation, or the moment where you received an invoice, the moment where you received the payment, or the moment where the goods was delivered. Whatever happened first, that is the tax point. So if you receive an invoice and you not even received the goods, you have not even received you have not even done the payment, but you have received that invoice, you can use that invoice to lower your purchases. So you can buy on credit and just plan. And if you're doing those things, just don't wait. In this era of auto-population, don't close a month without checking your VAT, how it is flowing. The moment you close it, you close totally. So if there was a supplier who their data did not auto-populate, the only thing they can do to you is to issue a credit note and issue another invoice in the next month. So you end up paying even taxes that you should have not paid on that month, but you're not checking your VAT. So keep checking how is it flowing every single day so that you plan properly. VAT withholding can use the money before 20th to aid the cash flows. Could be very, very small, but it's still is not even 20th. It is 5 days. It is 5 days after you create that invoice. You're supposed to pay within 5 days that money after you withhold. So within those 5 days, possibly it can ease your cash flow. VAT refund claims. So VAT refund claims. If you're on a business that is refundable, like export business, those VAT refunds can help ease the business. So I said that we also help you on those application and follow-ups. So you can also talk to us. When it comes to income tax, I said income tax, the greatest thing is documentation. First of all, have correct documents, have ITIMS compliant document, have your accounting software done very, very well, complete records. That is the biggest portion for income tax. Then you can use interest expense on loan. So if you take a loan for the furtherance of the business, that interest, you can use it to lower your profits as an allowable deduction. Bank bad debtors, and we have bad debtors, so many of them in our organization. So you can use them also to lower their allowable expenses. You can use them to lower your profits. But bad debts, you have to demonstrate proof of trying to recover. So you have to create a file. So some of us just have those data there, but you don't have a file. Have a file So if 3 million is your bad debts, have a file. Show this 3 million is from which customers. Their statements. Prove how did you try to recover with recover? Was there an auctioneer letter, a legal letter, an email sent? You have to show that process. And especially you create that file for audit. You don't know that day that audit will come. So you create it. It's not when you're filing it is required, no, but you need that document saved somewhere. So that imagine if you did bad debts of 3 million 2020. Remember, audit can go back 5 years. And you don't even remember what happened that day. But if you have documents, you just refresh and be able to answer queries to KRA if they ask you a question. Capital allowances, these are deductions and allowances that can also help you reduce your tax liability. So this is mostly investment deduction, industrial building deduction, commercial building deduction. There's a lot of allowances and you earn a lot of tax remissions. But you need to do application and you also need a lot of representation for you to, because this is something, for instance, some of it will go 25 years, others 4 years. So there's an audit that happens for you to be able to go that. So if you're an organization, you're doing the industrial building, investment, we can also help you apply the capital allowances. I hope you can hear me. Did I lose somebody? Let me check. I don't know. Okay. You can hear me? Let me see. I just one yes. Thank you, Vinny. Thank you. So when it comes to pay as you earn, for employees, the pay as you earn, the tax saving strategies are on employees. This is where you take an insurance cover. So take an insurance cover. You also do a mortgage instead of a loan. You also register with a retirement benefit scheme. You contribute to a registered home ownership savings plan. All of those, because these are things that you're doing for your future. They always come back with a relief. There's always a relief. And when you apply them and you get those policies, you can bring those policies to your HR and they can input those details so that you reduce your pay on a monthly basis. If you're disabled or there's someone who is disabled in the organization or enabled differently, there is an exemption of the first 150 million per month from pay as you earn. From pay as you earn. So it is very important for you to help them get those exemptions. However, they are supposed to have the exemption certificate, so they can apply for the exemption certificate. The other tax saving strategies is proper record keeping. I mentioned that. Accuracy when filing, I've really talked about accuracy. When you're doing the monthly filing, the yearly filing, accuracy, there's no errors done by someone who understands, not done on the final day, like on 20th at night. That's when you're doing the auto population, no? And I always say that those returns, those records, they first act as audit triggers. So accuracy is important, understanding timelines, avoiding interest and penalties, and finally engaging a professional tax expert like us in the process of tax. What are some of the emerging issues? What are some of the emerging issues that are happening right now? I know we know about tax amnesty. So tax amnesty is ending June 2025, and it is covering periods until December 2023. So if you have penalties and interest and principal amounts for December 2023, uko nyuma, you can pay the principal amounts, then you can receive the tax amnesty. And I hope some of you are enjoying the amnesty. I guess we are about 4 months to the closure of that amnesty. You can take advantage and you can do that. And if you don't know how to do the tax amnesty, you can also talk to us. Emerging issues, others are reverse invoicing. I don't know how many of us have been able to do reverse invoicing. So eTIMS, now you can do reverse invoicing. You know the way someone come to sell you something and they tell you they don't have eTIMS or they don't know how to operate, or you know those ones. You can do reverse invoicing. You can raise an invoice on their behalf. So you can raise an invoice on their behalf. And these I've seen mostly in organizations like Export, where they are dealing with the farmers. So they tell the farmer, you have to have the eTIMS invoice. And then the farmer says, we don't know how to do that. So they raise that. And it is very important to raise with consent from the person to the person that you're raising from. So, because on the other hand, how eTIMS is operating is, if the company says we have to buy through eTIMS and they do reverse invoicing, this sales is going to be reflected in this other person PIN. So at the end of the year, they are supposed to declare the business income and do those calculations and pay taxes. So the essence of eTIMS is to signal that there was a business that happened during the year, so that you do business income and you pay due taxes. So for any person that raised an eTIMS invoice last year, you need to declare those incomes. So we have eTIMS. I know now we know about eTIMS, and I guess that was the end of the training. Let me answer your questions. We know we have a lot of questions. We handled the tax trends last time. So for the people who are asking where is the checker, so when you go to iTax, you're going to see the control unit, checker, invoice number, checker. This was all, and I think even now it has more additions. So do those checkers before you pay for those eTIMS invoices. And eTIMS has so many forms that you can do. You can do the USSD code, the *222# hash. There's the eTIMS online, which you download. There is the machine that you buy. You can do eTIMS integrated. You can do eTIMS on the iTax portal, on eCitizen, ziko nyingi. So you cannot say, I cannot be able to raise an eTIMS invoice because I don't know how. Even if you go to a cyber, you're going to know how to, they are going to help you raise an eTIMS invoice. And you can also raise it with your phone on the *222# 222#. It will take you a minute to register and another minute to raise an invoice. So let me answer a few of your questions. Let me go back and answer a few of your questions. Let me go back to the space where I had left so that you can ask a question. So who is eligible to onboard eTeams? Everybody. If you're doing business in Kenya, everybody. eTeams, there's eTeams for non-VAT if you're not on the threshold, and VAT for other VAT. Even if you're doing zero-rated, exempt schools, any business in Kenya, you can onboard on eTeams. Please advise how the following: a manufacturing company has a lease factory and everything that the factory comes with at a monthly cost of the cost treated as rent expense every month or treated as lease asset and amortized. So Nasibo, so the lease is 10 million that covers the manufacturing, the whole plant and everything. Is it a lease, a rent, or lease assets? And how do we, I don't think it's a lease asset because this is these are payment that you're doing every single month. Are you doing 16% on that money, or is it an expense to the organization? I would want to hear more so that I can tell you on how to treat it. What documents do you have? As a director, can I give a loan to my company? Then I pay myself interest, which I will also use to reduce. Deka, I like your thinking, but those things will always create a lot of tax queries. A lot of tax queries that, first of all, that loan, that money that you're lending the company, where did you get it from? What are those other sources of income that you're having that you should be declaring? For verification of eTeams, how can I confirm if the supplier is in the special table on the point of sale? If by the time if you're put on special table, you cannot, even if you do your eTeams, it will not remit to KRA. So then go on iTax and check if those details are there. If they are not, don't pay, don't accept. So when that PIN is deactivated, you cannot raise. Even if you raise, it will not be remitted to KRA. So kindly check before you do the payments. Because at the end of the day, it will not auto-populate at the end of the month. So where will you per customer, where will you per supplies, but they are not auto-populating. So you're going to lose that purchase. You're going to lose the VAT on that purchase. In the event of a professional fee, is the amount subjected to both VAT and withholding? What is the threshold for VAT on professional fee? So Olivia, for professional fee, like for us, you're supposed to do 5%. When I come to your organization, you're the one who is doing the withholding 5%. But for me as an organization, if I hit that threshold of 5 million, I charge VAT. So I file VAT on my side on a monthly basis. So you find some professionals, they are not on the threshold of 5 million, so they don't have VAT, but withholding is being done. And withholding means at the end of the year, you are supposed to show those incomes, you show your expenses, then your taxes, then you deduct that withholding that was done. So it is an advance income tax. It is an advance income tax. How do you treat interest on loans from foreign countries? Still the same, but make sure, because some of these interest from foreign companies, there is what we call is the interest on the market rate. So there's always some query. You find you've been given a loan by a sister company. So KRA will always do those deemed interests. Sometimes those will raise a lot of other queries. So make sure that the interests that you also get doing is on the market rate. We are having ITIMS invoices from our suppliers with our KRA pin, and then they are not auto-populated in a. Make sure they are auto-populated. Make sure if you detect that, don't buy from that customer. You'll be the one losing, James. You'll be losing. So before you do the payment, go online, verify. Before you pay them, verify if it can auto-populate. Do a checker. So could be an ITIMS has a problem on their side, they are not doing remittance, or there's something happening. Kindly are the services charged for commercial properties vatable or taxable? So what are these services? Service charge. What are the service charge? Management fee, service charge. So possibly the collection, what do we call it? Like garbage collection such. I think you can treat it as an expense and not charge VAT. So you pay the VAT on your rent. I have a CBO apparently. In the year 2023, we had a lot of grants, and for the purpose, we didn't audit for the year. However, last year we didn't have grants. Do I need to pay auditors for 2024? Alphonse, oh my God, what do I answer? Yes, tell them to do you some checks, some checks and balances, and you pay for it. It's also important. If I can prove that the other income lines are legitimate, can the interest charged on the loan from directors be used to reduce tax liability? Can the interest charged on the loan from the director be used to reduce the tax liability? So you lend a loan to the company as a director, then you demand them to pay you interest. At what percent? Cecilia, it's doable, but I always say these queries will be too many, because KRA can even say that interest you're paying the director is pay as you, and there's a lot of queries. Some of these things we just avoid. me, why don't you, when you put loan, when you provide money to the organization, why don't you just say it's capital injection, and that's it? Why is the registering? So Cecilia, it will also depend on the explanation that you're going to give to KRA on that line. And yeah, why is registering a company better than sole proprietor in tax planning? Because a company is a legal entity that is different from the owner. So it carries the tax burden alone. It has its own PIN. If there's a query, you ask the company. But a sole proprietor, you use your personal PIN for tax purposes. If there are queries, you answer the query. And if there are tax liabilities, you'll be on those PIN. Remember, the registered company, you can close it and open another one and another one, but your personal PIN will always drag those tax queries wherever you go. Can I opt to pay turnover tax instead of corporation tax if I fall between? Yes, you can. Yes, you can. You said A. But remember, you said here 1 to million. I guess now is up to around 25 or 50 million. I'll check on that. You can. But for instance, let's take an example that you're doing 10 million. And you do turnover tax. And remember, turnover tax is on gross sales. So it is 10 million multiplied by 3%. That could be how much? 300,000? But if you do corporation at 30%, you may find that you even have purchases, expenses. You might even be on a loss position and not pay any taxes. So it's something that you're supposed to look at it. And remember, turnover tax is also done on a monthly basis. The other one is done at the end of the year. So also the space where that you're supposed to keep doing this every single time. If a commercial property is expected to cost 10 million, but the expected rental are below VAT threshold, is it necessary to register? Commercial building, there's always that tax query that our threshold is not below, is below 5 million. So in the 10 years that I've worked, I've seen spaces where we have won in that fact that they were not supposed to register. But you find other places where they say they don't, for commercial building, they should register even if they are at zero. So it depends, Thomas, on how you do representation. There is commercial building, there is always a gray area on that. But you can still stand and say, I didn't meet the threshold, so I don't pay the VAT. In the event a professional fee is subjected to VAT, what is the threshold for VAT on brush? 5 million. The threshold is 5 million turnover, and you register. Remember, withholding is done by the person who is paying you. And VAT, you are the one who is raising it. I guess I had explained that. I had explained that prior. How do you go about to inform KRA when you close your business so that you are no longer eligible for any business? Kimberly? So the moment you inform them that you closed, they are going to want to audit you. So the moment you tell them, they will just want to audit you. So that telling is audit trigger. So if Kimberly, you have closed, if you have VAT, continue doing a nil return. If you have corporation tax, do a nil return. Why are KRA discouraging registration of Teams device when they perform same function at eTeams? Mohammed, a very good question. Teams device is no longer in use. But they don't buy a Teams device. It's no longer in use. I guess from last year, it's no longer in use. So the eTIMS device is what is in use. The difference between TIMS and eTIMS is one, stock management. The TIMS device operated as the old ETR. It was the very new version of TIMS. It operated the same way as the old ETR. The only difference is that it remits that information to KRA. But eTIMS, when you're doing eTIMS, you have to declare your stock. So remember how we are doing the old ETR. If you buy something for 50,000, they go do 50,000, add 16%, and then they just produce the receipt. But under eTIMS, you have to say 50,000 is what? Is it cement? 10 bags of cement, 2 what of what? So that invoice is done under eTIMS. It has to declare what you bought. And because it has their stock management software. And by the way, this year, 2024, we are going to get a lot of eTIMS audits because some of us, what we bought and what we sold doesn't match. So your purchases, you have a lot of purchases, a lot of it. You bought cement the whole year. The whole year, you bought cement, well, 10,000 bags. The cement you bought is 10,000 bags. The cement is 10,000 bags. Yet, when you come to sell, you don't sell to everybody. So you sold 2,000 or 3,000 bags. KRA will do that stock management on your eTIMS. And they'll tell you, you show us this 7,000, where is it? Or we also show on the stocks. And also that is also a very big catch for eTIMS audits. So I believe this year we are going to do eTIMS invoice. So that is the difference between eTIMS and TIMS. And TIMS is no longer in use. George, how can I file housing levy to company that has only MRI? George, you can talk to us, book a calendar booking. My co-host, you can do a calendar booking. We're going to give you 30 minutes consultancy free of charge. And then the other that you're going to pay for it. That will be free. And we're going to show you how. Last year, I did that demo so many times. But right now, we don't have time for that demo. So talk to us. We're going to demo that. Harrison, the taxation masterclass is online, 2 hours per day. I'm going to talk about it right now. 2 hours per day in the evening, and it is the best masterclass in Kenya right now. Can I pay for the masterclass? Pole pole, yes. But you have to complete the fee until before the end of the training, so that you also get a certificate. So let me go back to the notes for 5 minutes. And I have a co-host who want to train us on something that we call My Accurate Books. I hope they are ready. My co-host, you can signal me if they are ready. If they are ready, you can signal me. So the taxation masterclass will be happening on 10th to 21st March, 7 to 9 p.m. And we are charging 25,000, and it is the best. You learn a lot. Learn a lot, and we give you a certificate. Karibuni sana. That is our calendar. Who are we? We are an audit firm, and we do audit, tax advisory, bookkeeping, internal controls, and we do a lot of good work. So you can talk to us on the numbers here. You can talk to us and we can help you. So that number 0728 89 74 29. You can talk to us on any area tax query. When it comes to tax, I take tax cases to every level, audit level, anywhere in Kenya. And we go to the objection, to the tribunal, to the ADR, depending on your case. I'm going to advise you on the process and we're going to win the case. We shall win that case for you. That is tax. We are in the audit period. We do a lot of audit and we understand tax. So we do a lot of very good representation and we are affordable, by the way. We are very affordable. You can take that number. If you have a tax query, any query, you can always talk to us and you can do a calendar booking on the chat. We're going to give you 30 minutes free query on any query that you're having. Could be a personal query, and then you're going to pick it from there. So I want to introduce to you my Accurate Books. I want to introduce to you my Accurate Books software. My Accurate Books software. That is our new innovation, and it is a very good innovation, and we launched it last year in November. And this is an accounting software that is simplified. So I always give a very long story on how we came to do this innovation. But it is extremely user-friendly, it is easy, it is a local solution. You can actually use this as an entrepreneur. You don't have to have the accounting background for you to use this software. It is very user-friendly and it is going to help you manage your business. Remember, we talked about documentation. And the point of sale is actually free of charge. Then the other paid version is only 500 shillings per month. Then you're able to do your expenses and you're able to do your purchases, and we give you a lot of support. We have a whole entire bookkeeping team is going to give you a lot of support to make sure that every month you get your management report, you get your reports on time, and it is digital. It is available on Play Store. So you can go on Play Store. You're going to see that calculator there, my Accurate Books, and you're going to download it. It is very easy to just get in. And I wanted my co-host to talk more about it. So I don't know, let me check if they are ready. For the next like 10 minutes, we talk about Accurate Books. Kindly allow. If you have a further question, I kindly request to do the calendar booking. Then I'm going to answer. Leah isn't integrated with eTeams. A very good question. We are finalizing on integration. So next month it's going to be integrated. It's going to be integrated with eTeams. So I'm going to tell you right here, right here. So right here. So a minute we do the sharing. A minute, we will make sure that before 12, we are totally done. I hope you have enjoyed the session. And always come next month. We will also have a very good session. And Matthew is saying, please answer mine. Which is that? Let me see. We produce ETR on monthly basis, but our clients are claiming the invoices are not auto-populated. And so are our sales also. What might be the issue? Matthew, eTeams has a lot of query. It has a lot of issues, by the way. eTeams machine, eTeams software has a lot of query. Matthew, I advise you to go to KRA, iTax Center. They will check on your eTeams. Some of our eTeams that we are using have issues of remitting. I don't know what is happening. Sometimes the eTeams system is down. There's a lot of issues around eTeams. So go to KRA, tell them that you have that query, let them look at the software, let them look at how you're doing it, and they will advise you. They will advise you accordingly. So there are those queries, there are those issues happening, but you can get help. Yes. So apologies for that. So we're going to do the demos next month, but you can go online and check my Accurate Book software, and you can just start interacting with it. And if you do want to know more about it, you can talk to us. Kindly talk to us. Let me show you the Accurate Book software. You can be able to talk to us, and we can really help you. So it will come with a package of bookkeeping where we can give you hand holding for about a month, 2 months, so that you can be able to be settled on how you do your bookkeeping. So with that, asanteni sana, 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 sana for being together with me. Kindly follow us on our social media pages so that every time we have a discussion, kindly be able to join us. We also do the tax trends. So always come. I'll always keep telling you what is new in eTIMS, what is KRA doing, what are taxes new, what everything. I will always be on the lookout to just know what is new, to just tell you. But right now, if you're struggling with the out of population, with the eTIMS, that is the biggest issue right now. and you can go to KRA, talk to them. There's a lot of ITIMS issues with the machine, with the transmission, with the blocking of the pin, special table. And you also, if you've been put on special table, you can talk to us. We can help you. We can help you with the process. It's quite tasking. So, and that's why I'm saying just be careful, so that that process could be long, and it can affect your business in a very big way. So with that, asanteni sana. Have a lovely Friday. See you when we see each other. And register for the taxation masterclass. Just come and learn. We will have a really good time. Thank you.